In this video, we're going to talk about how to get on board a trade that you initially missed. Stay tuned. Hey traders, a very warm welcome to you. Okay, so this was a question from a viewer or a subscriber. Thank you very much. Much appreciate all your questions and comments, good and bad. Okay, so how do you get on board a trade that you initially missed? This is an interesting one because I think a lot of people, especially with various market conditions, whether you're trading currency pairs, indices, stocks, cryptos, whatever it may be, if you're in an environment with explosive moves, you can feel a little bit like, I've missed that trade. I was watching it and I missed it. So let's have a look how you could potentially get on board that trade that you missed, and maybe some other things that perhaps would make you think of this a little bit differently. All right, the first thing is, have you really missed it? In other words, has this gone? The trade opportunity has gone. You need to just say goodbye to it and look for the next opportunity in another market or later down the line in that stock or crypto or FX pair, whatever it may be. What do I mean by that? So let's say you wanted to buy XYZ stock, okay? And the stock has then ripped up to the upside 5, 6, 7, 10%, and it seems to have just broken out to new highs, new 52-week highs. It's just motoring along. What are you going to do with that? Do you still really want it? Or was the premise of the trade to trade a break of the new all-time highs or 52-week highs or breakout or taking that 10% chunk? Was that the thesis of the trade? If that was the thesis of the trade, you've missed it. You haven't got on it. There's no point in worrying about it. Look for the next one. Just define your process or refine your process, should I say, a little bit better, of how to pick those stocks, pick those trade ideas and get them presented to you earlier and put a process in place for getting on board them, even if you just have a little nibble with small size early on. So you've got to ask yourself the question, have I actually missed the trade? Has it gone? Is my thesis done, dusted? I've just missed it. It's done. It's what I thought it was going to do. Shrug your shoulders, move on. Or do you think there's much more upside? I know you're looking at it from a perspective and saying, okay, you know what? I've missed the sweet spot entry. I've missed the key entry that I wanted. However, I still think this has got a lot more mileage. I still think this is worth buying or shorting, whatever it may be. Now I need to get on board it. So we'll look at some of those in a second, but that's a valid question you've got to ask yourself. There's two different things. The one is, hey, I've missed the whole thing. It's done, dusted, it's tagged the level I wanted, forget it. Or I missed a really good entry on it. I still think it's valid. How do I get on board it? And that's what we're gonna look at in a second towards the end of the video. But number two, what levels make sense from a risk perspective? Let's skip actually to number 3, which is, we'll go back to that in a second because that really comes into planning it. We'll look at that in detail in a moment. Why do you still want to get on it? So you've got to ask yourself this question. And really, this question is the first one. You ask yourself, this one is the second question. Have I missed it? The one is, why do I still want to get on it? And what you don't want to do is fall in love with the trade and say, you know what, I was right. I'm still right. I still believe it's going on. The point of a trader is not to be right. It's quite easy, I'm going to say that dangerously, probably getting a lot in the comments section, but it's quite easy almost to predict direction on stuff. It's harder to do it with your defined risk as a trader with meaningful size. What do I mean by that? So it's quite easy to say, hey, this crypto's going higher or this crypto's going lower. But you know what, if it goes up 20% first before it does that, could you have made any money out of it if it were traded? Probably not. It's quite easy to say this stock is overvalued and the short sellers are going to push this down to $10 and it's up at 300 at the moment. But if it goes to 500 first and down to 10, how can you structure that as a trader? No, you can't. You can't really position short on that. Some people do, and some people have the pockets to do it, but they have to do the size accordingly. But you get the point. It's easier to predict just direction than it is to actually do it with a defined risk. So back to this question is, why do you still want to get on it? Do you still want to get on it because you think it's going up? Or do you still want to get on it because you think there's a good risk reward trade opportunity presenting itself in that market? And that's something you've got to look at. And the thing is patience. Right, so forget about that. Let's look at number 2 now, or should I say this area here rather than number 2. Number 2 is, let's look at this. What levels make sense from a risk perspective? So assuming you still want to get on the trade, assuming you haven't really missed it, and assuming you want to get on it because you believe, hey, it's going higher and you believe there's a good risk reward opportunity there. So you need to look at it from a technical perspective now, from an operational perspective, in terms of as a trader, you know, the operations of finding a good that's smudged a little bit, but we'll make do with that. I'll clean that in a second. You want to look at it from an operational perspective of saying, okay, now where is my best entry? So assuming I have missed this drive up, you know, I wanted to buy it here, it was a double bottom, whatever it may be, and I missed it. However, I still think this thing is going up to this price level right up here. This could be a swing, this could be a day, whatever it may, doesn't make any difference. Now you need to say to yourself, okay, where is the best risk reward entry for a trader? The very worst thing you can do, guys, is just to buy. Because you think, hey, oh, know what? I was right. It's gone up. It's rocketed up. It's going to take that level. I don't want to miss the whole thing. I'm going to miss the whole thing. I'm just going to buy at this level. Do not do that. We've probably all done that and made that mistake. And that's a form of chasing. It's the FOMO thing. You need to structure a new trade around it, because that could happen. Likelihood is, and you know, I've been there and you've probably been there too, is it comes down here, you can't take it, you get stopped out, and then, oh, it does, yeah, it does it, and it pings up to the high. Don't do that. Structure a proper strategy, a proper entry, a proper exit plan around it. I rubbed it off now, but earlier I put patience. You've got to be patient with this. You've got to reassess it, and you've got to be aware, self-aware, that you might well be impatient because you've already a little bit agitated, potentially, that you've missed that entry there. So you say to yourself, what would be the best scenario here? Right, okay, I would like to buy a pullback. You know, I would like to buy at a support level. If we double bottomed at a support on the way up, I would like to buy, you know, a flag. I would like to buy, do I want to buy a breakout? Perhaps I want to see it test lows first and then a breakout. So maybe I want to buy, you know, a breakout if there's an intermediate, perhaps resistance there. Structuring your trade. Again, that's up to you to decide which one of these is part of it. Or maybe you do all of them. You say, you know, all of these are good. I'm going to have my position size. I know what I'm going to see. Okay, what price levels are good to look at? So you might then say, okay, well, actually, if we pull back to this price level and hold, I'm interested. Or you might not have a price level at all. You might just want to see some support on the way up. What I mean by that, so you might have it driving up. You don't know how far it's going to go. As long as it hasn't touched your target yet, and you've still got more mileage in the trade that you believe is going to happen, you want to wait then for some support to form. Yes, bingo, some support's formed. Now I can structure a new trade around the new price action with the old existing thesis of it's going to hit that higher target or lower target, whatever it may be. Structure my long trade around here with my stop and put a trade within a trade. Yes, I've missed that earlier move, but I'm still going to get on it. But the important thing is to structure it effectively, keeping the risk managed around the new conditions that have presented themselves to you, whether that will be a pullback, support, flag, breakout, fake out, whatever. You know, we can go on and on with the list here, but that's the key thing to it, is to look at a brand new trade, the existing thesis of this is bullish, that's my target, but I need to wait for this to come into play, and being also self-aware that you might be a little bit agitated that you missed that. And maybe another thing, just final thing, guys, before we go, just watch your position size on it. It's very tempting to go, you know what, I'm going to make up for that miss by, you know, a little bit more position size in that, because I want to make, I could have made a few thousand on that move. That would have been a very nice trade. And now I'm going to make this amount of money. Yeah, I'll make up for that by doubling my position size. Just be careful. Just say, you know what, I did miss that, but this is a new strategy coming in play, and I'm looking at it completely on its own, in a sole perspective, as opposed to looking at it in this. So I'm going to judge it from that. I'm going to keep my risk managed and accept it, and know that that actually still may not work, and it still may hit the thing. Doesn't matter. That's the way of trading. All right, guys. Hope that has helped you how to get on board a trade that you initially missed. Thumbs up if you like this kind of stuff. See you next one. Take care. Goodbye.